Hello everyone. Markets are caught between AI optimism and oil-driven risk, with US equities sliding to one-month lows as the Iran conflict shows no signs of easing. Meanwhile, Bitcoin is trying to hold above 60,000, while Aussie dollar hovers near two-month lows. This is your midweek technical outlook here at xm.com. Now let's get right to it. Now let's start with the US500 index, which is currently consolidating at near one-month lows near the 7,250 level, where the 50-day SMA lies. Should this rebound off the 50-day SMA hold, then immediate resistance might come from the 7,350 level, which previously served as a strong support region, followed by the 20-day SMA near the 7,480. And the important key resistance to watch is the 7,500 level, as a climb above this level could then retest the record high near the 7,620. Now, should the pullback from the record high of nearly 5% resume, then immediate support might come from the 7,179 level, followed by the key 7,000 psychological mark, and further the 200-day SMA near the 6,863 level would shift, break below this SMA would shift the sentiment back to bearish. The momentum signals are still holding in negative territory. The RSI is still below neutral. The MACD is losing steam from the positive region, reflecting this pullback, though they're also reflecting that this consolidation could resume before the next leg higher. Now let's also have a look at Aussie dollar, which is attempting to reclaim the key 0.7,000 psychological mark after dropping to two-month lows near the 0.6958 level. Now, should this rebound resume, immediate resistance might come from the 100-day SMA near the 0.79 level, followed by the key 0.7100 level, which is a key floor of this consolidation that took place at the previous consolidation that the pair was holding within during May. So a reclaim of this area is key. As for now, price action is holding below both the short-term and long-term ascending trend lines, and holding this pullback of nearly 4% from multi-year highs. Key support levels to watch are the 0.6940 that could cap losses from multi-month lows. That said, price action still holds above the key 200-day SMA. So the key for the pair is to reclaim this SMA cluster overhead in order to revive the bullish momentum. The momentum signals are also reflecting this downside and the selling pressure, with the MACD extending in negative territory. However, the RSI flatlining above the oversold is suggesting that this sideways trading could continue for now, which could limit downside risks. Now let's also have a look at Bitcoin. Bitcoin is also under pressure following this sharp pullback of over 25% from the 82,000 level, which was a three-month high, to multi-year lows near the 60,000 level, which was briefly breached at the start of the month. That said, it is attempting to consolidate this pullback, forming a fresh range between 60,000 and 63,900. So should this rebound hold, for now, then immediate resistance is this range ceiling near the 63,900, followed by the 65,000 psychological mark, and then the 20-day SMA near the 68,900 level. Then other key levels to watch is the 70,000 psychological mark, but really for sustained upside for Bitcoin, it really needs to re-enter back within this long-term ascending, medium-term ascending channel, which was intact since early February. and more importantly above the 50-day SMA near the 75,000 level. This is a key level to watch for in order to revive momentum in the broader crypto market, as for now it does remain under pressure, and support at 60,000 is expected to hold losses. It's been tested twice this year, but should it fail to hold, then it could retest the fresh yearly low near this 59,000 level, and then further below the 58,500 level, tracking October 2024 lows. The momentum signals are reflecting oversold conditions. They're holding in negative territory, but that said, it looks like this consolidation is likely to continue, and some recovery is expected, at least within this range for now. And that's all for today's market wrap. Thank you for watching.